Egypt is not the only African country that is considering selling minority stakes in state-owned companies. Further south in Ethiopia, the government has asked for bids for 45% of Ethio Telecom. Now, until the entry of the consortium that includes Safaricom and a few other companies, including Japan Sumitomo, into the market in 2021, Ethio Telecom had a monopoly in a market of over 100 million people. In the second half of 2022, the company had 70 million subscribers, nearly half of whom are using its data services. It also had just over 27 million users on its mobile money service, Telebir. That service handled transactions worth nearly $3.1 billion in the second half of the year. Revenue for the period was equivalent to around 630 million US dollars. Now, comparatively, Ethio Telecom has more subscribers than any of the big three operators in Nigeria except MTN. And in fact, that's the interesting comparison point here, because MTN Nigeria has about 80 million clients. Ethio Telecom has a bigger base of mobile money users, despite that service being barely 2 years older, and a bigger base of data users as well. The numbers aside, though, any prospective investor in Ethio Telecom will be facing comparable dollar scarcity, capital control issues, comparable to what we see in Nigeria. But with all of that in mind, what is 45% of Ethio Telecom really worth? That was the starting point for my conversation with Zemedine Nagatu some hours ago.
Normally, in this kind of environment, you will need to add a premium to the standard multiples to be able to come up with, I would think, an acceptable valuation for the value that the government believes Ethio Telecom will bring. I mean, we've been involved on the M&A side for a potential acquirer in the past. So we do know that any serious player will be looking at the standard multiple plus a premium.
I guess for any prospective investor, their main concern might be, on one hand, 45% doesn't exactly give you control at board level. And two, if you do bring in the cash, right, and I know we've discussed this before, it's a question of you bring the capital into the country, but it's essentially going to be there for a while. So this is a long-term play, not your usual 5-7 year investment cycle. That might winnow down the potential investors who might be able to come to the table and say, yep, we'd like to invest in Ethio Telecom, might it?
Right. I mean, you more than anybody else knows the market, right? I mean, there are very few big telco players pan-African. I mean, the likes of MTN, Airtel, Orange, Vodacom, the Vodafone, the Safaricom group. Those are really the only real serious players in Africa who want to have a footprint across Africa and then in the bigger market. So what I see right now actually is, of course, Vodafone is out of the picture because they already are, invested via Safaricom. So you will have Orange, Airtel, maybe one big player, one or two big players from the Middle East. Because Etisalat, yeah, those, or maybe Saudi Telecom, but the real players are very few in Africa. However, and let me just add a little interesting scenario to this. In 2 years, when the Ethiopian Securities Exchange, the stock market, is established, I suppose the government, I understand, might be considering, say, offloading some small shares, some percentage, maybe to the public. But even for a player who comes in as a strategic partner at this stage, if they're looking for an exit or a partial exit or monetization of their investment earlier than they anticipated, that could also be an option, an attractive option, which did not exist today. So
but
these are some of the scenarios.
Even with that option in play, though, I mean, if you're buying 45% of the business, because that's essentially what's at play here, that doesn't give you absolute control on the boards. Might that be a turnoff for any of these potential investors?
So without giving away trade secrets, I mean, as you know, we do M&A for a living. So we go into a lot of strategic deals where a big foreign player comes into an African country, buys less than 50%, right? But there are ways of having majority control, operational control, that is, without having majority equity control. This is done all that through a shareholders agreement, by the way. So you can have, and I'm not suggesting this is the case at Ethio Telecom, but it could be applied. You could say, listen, I'm coming in buying in 45%. I'm a strategic investor. I'm not a financial investor. So I want to add value to the deal. And you would say, you know what? Certain C-suites positions should be allocated to me because of the value, the international experience, and other things that I bring.
I just want to go back to the structure, right, around Ethio Telecom, because looking at where their revenue comes from, it's almost like looking at MTN or Safaricom or Airtel in some of their markets back where they were, say, in 2008, right, where voice calls and SMSs sort of were the bulk of the revenues. Because looking at where they were about a year ago, data was less than 30% of revenue. And I know they've got 27.2 million subscribers on mobile money now, but it sounds like there's a lot of potential upside to Ethio Telecom if they can get their data business and the mobile money business to really light the afterburners.
You've explained it extremely well. Obviously, you've seen the data and all that. That's actually one of the main attractions for a newcomer. As you know, in the telecom industry now, they can almost give away the voice part of it. It's almost commoditized.
Do you think that there might be some value, perhaps, in splitting out the infrastructure side of the business, essentially selling off the towers and spinning that into a separate entity? Because the infrastructure requirement, as you mentioned, to cover a country like Ethiopia is absolutely massive. There might be perhaps a bit of value in having that as a separate entity.
You know, they had originally considered that even when they were issuing the first license to Safaricom, they had considered about unbundling, having the infrastructure side on one by standalone, or even completely outsourcing it. As you know, these days, there are power companies, there are infrastructure companies that run these things, right? In most countries, actually, is now separated from the telcos. Here, they decided, because they've already made huge investments in that area, they thought there would be a lot more value. For example, at the moment, Safaricom are running 100%, I think almost 100% of their infrastructure is leased from Ethio Telecom. So they earn a pretty good return from what I hear on that one. It's not going to be permanent, but at the very least, they're getting additional revenue on the towers and other infrastructure that Ethio Telecom has spent years and billions of dollars investing over the years.